This is the Blockchain Real Estate Podcast, sponsored by the Blockchain Real Estate Summit. If you're interested in the intersection of real estate, blockchain technology, AI, and more, you've come to the right place. Don't miss your opportunity to attend the Blockchain Real Estate Summit 2024, happening this September 24th through 26th, online for our worldwide audience. Get your tickets at blockchainrealestatesummit.com/registration. Enjoy the show.
Hello, everybody. Michael Flight here again with the Blockchain Real Estate Summit podcast. We have a barn burner, a great thing here for you today. You're going to love this. Scott Thiel is one of the original people that started doing real estate tokenization and any type of tokenization of illiquid fund shares. And I've been an admirer of his. I've known about him. He's been involved with some larger companies, and now he's just started an amazing startup called Tokinvest, and that's at tokenvest.capital. But first of all, I'd like to tell you, we've got the Blockchain Real Estate Summit coming up September 24th through the 26th, 2024. It is 3 amazing days. It is 3 time zones. It's Europe, it's Asia, it's the Americas. And we have speakers from I think we're at 42 different countries right now. So it's everybody who's anybody that's doing things in the real world asset tokenization space. With that, I just want to remind everybody that there is no legal advice here. There's no financial advice here. And there's no accounting advice. You need to make all your own decisions. But with that, I'd like to introduce Scott Thiel. Is it Thiel or Teal?
Thiel.
Okay. So Scott, why don't you tell us a little bit about yourself, your backstory, and why you decided to bang your head against tokenizing real world assets?
Yeah, great. Thanks, Michael. Great to be here with you. Thanks for the opportunity to have a chat. So yeah, the backstory. I spent many years as a lawyer. Before I became a lawyer, I was actually a computer science grad. So I was kind of a computer scientist turned lawyer. And I actually spent quite a lot of my career as a tech lawyer and was always interested in the confluence of those disciplines. I always said to people that, I was really a contracts, sort of tech oriented contracts lawyer. And I used to write contracts like code because I learned to code first. And honestly, that's not a bad skill because you've got to be pretty exacting in code. You get away with a lot more in contract drafting than you do in coding. So
I'm just going to say you were one of the first smart contract drafters.
Well, yeah, and this is the thing. So when smart contracts turned up and suddenly they went, well, let's start creating sort of legal rights that have autonomous, functionality using kind of Boolean algebra. That was pretty natural to me because that was back to, well, now we make contracts, autonomous. So yeah, it was very much an obvious sort of connection of the disciplines that I'd worked through in the past. And then, working as a lawyer, really what we do when you boil it down is we agree rights between parties. That's what most legal documents are. One or more parties agreeing what rights they have between each other. And those rights are documented in, provisions in a contract. And to me, and this was probably around about 2016, 2017, it started to dawn on me that the digital evolution of law, which is very, very long overdue, and I think is beginning to be in the post, not least of which is because of generative AI. But to me, it was around, well, if we could put these rights into a digital format, just like we've seen with the digitization of all industries, you're going to be able to do more interesting things with them. And so breaking them up, fractionalizing them, trading them, moving them around, collateralizing them, et cetera, suddenly becomes much more possible than here's a 150-page document with some wax seals and stamps sitting in somebody's drawer somewhere. So to me, it was really was the digital evolution of what I was doing as a lawyer, is to start creating these bundles of rights into this new digital tradable format.
Right, you're bringing us from the analog age into the digital age, and
yeah, absolutely.
A lot of it, it's like, well, and you and I are old enough to remember records, but maybe a lot of listeners won't remember records, but now it's all streaming and everything else, and the same thing. We moved our offices about 4 or 5 years ago now. I can't remember how many years ago, but we had 2 large rooms of file cabinets. I mean, they were just literally like some of the biggest rooms in our office, and they were just file cabinets. And I think now we're down to about 5 or 6. So that's,
Yeah, no, absolutely.
yeah.
Yeah, well, if you walk around law firms today, they're still full of cabinets full of paper, which is ironic.
Right. But everything's been digitized. So Scott, why don't you give us a little background about how you got into you went from analog to digital, and it was a natural fit. But how did you decide to? Because I know you've done some things for a long time in the tokenizing assets and tokenizing real estate space.
Yeah, absolutely. So it was all well and good deciding, wouldn't it be wonderful if we could put these rights into digital form? And so in a previous company, I created, the tokenization capability. It's funny looking today where tokenization is an absolute, commoditized act in many respects. But when I first started this journey, we had to kind of start with a blank piece of paper and build a sophisticated token engine. There was very little functionality that existed at sort of native protocol level in terms of the moving pieces around a complex, tokenized real world asset. Obviously, that's a fast, changing and different story today. So that was the first battle. It's okay, well, we now need to create something. And because it's more than just a cryptocurrency, it's actually got moving pieces and contractual rights, and it's got counterparties, and it's got things that are moving pieces within it, and lots of data. We had to create a more sophisticated token than was typically available as the sort of first generation ERC20 tokens. And so that's what we did. But that was a process, and it's a process that's still necessary, but one that's far less challenging to actually achieve, with today's technology, and particularly the development of protocols. But then what happened, and I think this is, we've seen this through the evolution. Obviously, as a lawyer, you go from a bundle of rights that between two parties that may not be regulated. Suddenly you put them into a digital form, and suddenly you can break them up. And all of a sudden they leap across this very significant boundary from being an unregulated interest to a regulated financial instrument. Now, there are lots of different definitions of this, around the world, commonly referred to as securities or collective investment schemes or managed investment schemes. There are lots of different words, but essentially, once you start fragmenting rights and pooling monies into a common kind of, interest, then you jump across this and you do it very, very easily, practically. And one of the interesting things is the way that the technology allows you to do that. So, let's use. Well, I'll start with an example of a real estate asset. If you go and buy a piece of real estate today, and you're one buyer, and you go and buy a piece of real estate, and you get your name on the land registry, well, that's great. It's not. I mean, it's regulated in a sense that it's recorded in the land registry, but it's not a regulated financial instrument. Provided you can stump up the cash, whether yourself or using traditional finance, you can go and buy one. There's no complex rules around that being a regulated financial instrument. But if you suddenly say, well, actually, can 10 of us get together and buy 1/10 of it each, it has the habit of suddenly becoming a regulated financial product. And then all of the rules that are, one of the most complex and onerous sets of regulations, on the planet, suddenly kicks in. And even worse, every country does it different. Right. And so you've got this kind of complex set of rules that are country by country, applying to what the technology is suddenly allowing us to do, which is create fractional interest and having them trading with no regard for national boundaries, across borders and across exchanges, and all of the technology enablement is sort of crashing against TradFi regulation. And that's been the real challenge, is how do you bring these assets to market? And the short answer is it's been, I often hear people say, well, security tokens or real world asset tokens with the true promise of blockchain. And I believe that, years ago, I thought we'd be there by now. And we would have been, but for the slowness of the evolution of regulation. And so I've wrestled with this problem in multiple, jurisdictions around the world, where, quite simply, the traditional finance regulations and regulators were not adequate. And so there was this question of, can I actually do this legally? And sometimes the answer was no, or not yet. Sometimes the answer was, I don't know. But when you start talking about, real world things like, valuable pieces of property, people are very nervous about, well, if it's not clear that I have a clear regulatory route to market, I'm just simply not going to do it. And that's been a very legitimate level of caution from a lot of, high value asset owners and issuers in the market. And that's where, my journey then led to, well, and I was in Hong Kong for much of this early part of my evolution. Spent a long time in things like the SFC, sandbox with tokenization projects. Similar in Singapore, we did projects in the US, Canada, and it really was just very difficult to bring these assets to market in a legally compliant way. And then what happened in early 2022 was somewhat out of the blue, I would say. The Virtual Assets Regulatory Authority of Dubai appeared as a new standalone, brand new startup regulator, which is fascinating because
Right.
most of the rest of the world is taking traditional finance regulators and evolving them and evolving their regulations, whereas Dubai went, how about we just start with a blank piece of paper and a new set of regulators and look at it afresh? And I was fortunate enough to be part of the team that worked on developing those regulations through 2022. And so that's why we've now launched the business here in Dubai. It's why I've relocated the family here to Dubai, because I think it is now the best purpose-built framework to do this thing. There's still challenge in many other jurisdictions.
Can we draw down on that a little bit? Because
Sure.
my understanding also is they created like new legal courts too to revolve around those, so that they can be a jurisdiction of choice for people that want to issue securities and other things like that. But I might be wrong on that. So
Yeah. Yeah, they didn't create specific courts to deal with virtual asset regulation. I didn't practice law here in the UAE, so my knowledge of all of this is really a journey over the last 2 or 3 years only. But it is a very fragmented legal jurisdiction here. So there are many free trade zones.
right.
There's the offshore jurisdiction. So Dubai has the DIFC, which is actually an English law offshore jurisdiction in the
Okay.
middle of the city. There's a little slice of England and English law kind of sitting there. And then you have all of these, and then you have onshore, and then you have multiple other free trade zones, all of which have, in certain areas, their own laws. So it's quite a strange situation where you have, it's a bit like, kind of a state and federal system in, say, Australia or the US, where you have
Right.
federal laws and then you have state laws and then you have these free trade laws all applying. So it's quite a complex environment. But interestingly, VARA, which is the Virtual Asset Regulatory Authority, doesn't sit in the DIFC, which has been the traditional home of financial services regulations. It sits in the DWTC, which is the World Trade Center Free Zone.
Okay.
So that probably is where you're getting that kind of, it would be regulated elsewhere under different courts, for example, because it's not in the traditional home of financial services reg. But yeah, they didn't specifically create courts, not that I'm aware anyhow for this.
Okay. All right. Well, it might have been the English law court, but I just
Yeah.
thought it was interesting that countries could compete to get legal jurisdiction of things, and it's like, yeah, if the courts are better in a certain place, then you should want to bring people to the best places that
Absolutely. And I've seen that there are places that have done that very successfully. I mean, Singapore has an amazing international arbitration center because they set themselves up as a great place to do international arbitration disputes, particularly in complex areas like shipping and, that are notoriously boundaryless. So yeah, no, you're
Right.
absolutely right. There is an opportunity to grab market share jurisdictionally by making yourself attractive.
Right. Well, let's talk a little bit about Tokenvest Capital, because you talked about why, this was the best place to set it up. And, Dubai's certainly a great country. I've been there. I love it. I always describe Dubai to people when they say, well, what's Dubai like? I'm like, well, it's like Las Vegas times 10. So, more, higher buildings, more lights, more excitement, but I love the area over there. So why don't you talk to us a little bit about Tokenvest and what you're doing?
Yeah, sure. So we've put together an amazing team. And again, over the journey of the kind of 6-7 years I've been wrestling with this problem, one of the really interesting challenges is that this doesn't sit in any traditional bucket. And so team is essential because you need, we're going through the VARA licensing process. It's a very comprehensive financial services regulatory framework. Some of our team has done FCA licensing work in the UK, for example, and they would describe the licensing process as at least as thorough and challenging to get through. So you need to be able to deal with traditional sort of FinReg principles. But then you've got the overlay of Web3 technology, which is, despite all of the developments in recent years, is still actually a pretty nascent space.
Right.
If you compare the sort of maturity levels of even the leading protocols today to sort of traditional banking systems that might be creaking from being too old today, these are very new, and that newness creates its own problems in terms of standardization, interoperability, and that is a real meaningful challenge. So it's just an example of why it's been really important for us to put together a crack team that sort of straddles the boundaries of traditional finance, traditional business, an understanding of Web3 technology, an understanding of these new regulatory frameworks such as VARA that just haven't really existed, how they coexist and how they interoperate with traditional financial services regulations and regulators as well. And so that's been really important, is to put the team together, and we're I'm very grateful that the people who have been excited about what we were putting together have come and joined us from some fantastic places. We are in late stages of the broker-dealer marketplace license, which will allow us to bring tokenized virtual assets to market and to distribute them as a regulated product, and to have them trading in a secondary marketplace, which is that's the life cycle of what we're trying to do here. It's very exciting doing it in Dubai, not just because of the regulatory framework, which I've mentioned, but because of the nature of the place. It's up for having a go. I've been in Hong Kong trying to do this. I worked previously in the UK. I'm originally from Australia. Those are mature markets with mature existing frameworks. There's if you like, a lot more to disrupt in those markets, which has made it more difficult, I think, for them to they're kind of, there's more to worry about in terms of what are we disrupting, because there's more to disrupt.
Right. And I've always said too that it's the legacy players that don't really want things to change.
Certainly. Yeah. I mean, if you're a global financial center today, you don't want new ones emerging. What I'm pretty confident of is we're going to see, the world economic map is always rewriting itself, but I think this technology, particularly as it relates to financial services and the implications for that, is really going to be a catalyst for, when we talk about the financial, global financial hubs of the world today, are they going to be the same list in 10 years? I don't think so. As a minimum, there's going to be some very, very significant newcomers in that list, and potentially some that fall away because they don't manage to keep up with the transition. So I think that's going to be very interesting to watch.
Yeah, no, I say that, and I can see the evolution, because I'm from Chicago. I grew up in Chicago. A bunch of my friends were traders at the Merc, or the Chicago Board of Trade, and then that all went online. And then you actually don't need those anywhere in Chicago or anywhere in New York. Those things are out in the ether, and people are just trading all over the world. So it's wherever the best regulations are, and wherever the best structured markets are. Yeah,
and I think that's one of the, I'll be careful about what I say here, but one of the things that's been really refreshing about, the entire process of my journey in this part of the world compared to other parts of the world has been the level of ambition, from the top down, but it really flows in through the conversations we have with regulators. There's an absolute desire to make this industry a cornerstone of, the Dubai story. And
Right.
if you for those who have had the opportunity to read the D33 plans, the ambitions for Dubai by 2040, and they're looking at doubling the size of the city in the next 15 years, having doubled its size in the last 10. And these are staggering ambitions that I wouldn't bet against, because there's just this energy and ambition. And so when they say, we'd actually like to become a global financial hub here, by really embracing this new technology from the ground up and becoming a really rich seam of and even from a talent point of view, the amount of, you go to the Web3 events here today, which are all the time now. And
there's one every week, a blockchain or crypto event.
I mean, it's amazing, and they're all packed, and they're all really vibrant, and they're all. And then again, I won't name names, but you go back to the fintech event in other major hubs, and it's people talking about a payment solution. I'm like, well, didn't we already do that? So yeah, it's quite noticeable how progressive those events are, and how rich the seam of talent now is here. I mean, hiring in this space here is actually really exciting, because a lot of people are relocating here because of that opportunity.
Yeah, very nice, very nice. Why don't you tell us, because you mentioned that you're applying for your broker dealer's license, you're in that process right now. Why don't you walk us through Tokinvest and what it does, what it's going to do, and is it going to be like a marketplace, with something similar to like an ATS on the back end, so that shares can trade? So why don't you walk us through, if I came in and I wanted to, I've got a really great debt fund that I wanted to set up, or I wanted to set up a real estate investment. Like, we're working on a deal right now down in Uruguay that's, just spectacular. So if I wanted to list that with you, how would I go about that? And how would I?
Right. And I mean, it's an easy question for me to answer, because it's quite literally what I'm working on today. So if we look at the asset classes that we're focused on, particularly early doors, it's real estate and funds, and often the crossover is real estate funds. So they are, I think, the low-hanging fruit is a gross understatement of the complexity of doing it, but they're the areas where we feel there is fundamentally investor demand, which is really important, because we, as you can imagine, we get a lot of crazy people ringing us up wanting to tokenize all sorts of things, and that's been my journey. And it's fun, and you entertain all sorts of ideas about changing the world through tokenizing crazy stuff. But at the end of the day, what are people actually familiar with and wanting to buy? And most people have to live in a house. They understand real estate. They'd like a piece of it. Housing affordability is a global crisis that's only going to get worse. People want to get on this property ladder. So there's a lot of motivation on the downstream, which we're focused on. But to your specific question, so a real estate fund, or a fund that wants to come in, be distributed as a tokenized interest here in Dubai. So that's we would have a conversation. We'd understand what the structure of your fund is, what it looks like. We'd understand the economics of it, and there's a deal qualification process that we would put any asset owner issuer through, which includes an understanding of your motivations, because for obvious reasons, a lot of the motivations for some people, well, it's not unusual for the motivation for people to come to us is, can't we just magic up money like they do in crypto with garbage product? And that's incredibly rude, but it's fair.
No, it's incredibly true too, because I've had these conversations forever. We have people come to us and say, we've got this thing and we want to present at the or sponsor the Blockchain Real Estate Summit. I'm like, well, number one, I live in a regulated area, and I'm not going to get fouled with promoting something that's clearly a security. And they're like, no, it's an NFT. It's not a security. It's like, well, no.
Apparently overnight NFTs aren't safe anymore as well. So you see. So even that argument's gone out the window, even if you want to pretend it's an NFT.
No. So I understand what you're saying there. Plus, there's people that are shady that are just trying to,
Oh yeah. We get a lot of weird and wonderful requests from interesting parts of the world. So that happens as well. And so I mean, to that point, we then obviously AML KYC the investor, the asset owner issuer client, and then to get into the nub of the process. So under the VARA regulations, there's a requirement to initiate an issuance approval process. So there's an initial questionnaire that needs to be filled out, where you sort of outline the bones of the deal, which is something we do a feasibility study phase with the client, and we say, okay, let's look at your product. Once you get through our qualifying criteria, and we decide, okay, this looks good, and one of the really important questions around that is, anyone going to buy it? Because we're not going to be listing things that are not desirable. But once we get through those sort of gating processes, the mechanics of the process is to fill out the issuance form, which is, it's not I think it's about 13 questions, and it really just outlines the bones of what the offer will be. So think of it as a summary of the offering documentation, and that then gets submitted into the VARA process. Legally speaking, there's two things happening simultaneously at this point in time, at least. For us as a broker-dealer, we have the broker-dealer handbook and all of the rules and regulations and requirements for us as a broker-dealer to bring a virtual asset to market. So there's that whole kind of set of rules. But for an issuer who's bringing an asset to market as the issuer, there is also an issuance handbook, and there's another set of rules that apply in there. And at this point in time, there is a requirement for the issuer to get approval to a specific issuance, even though it's currently coming through a broker-dealer such as us. So there's a little bit of, you've got to look at two sets of regs at the same time as you're bringing it to market.
Okay.
So you file that form. We obviously work with clients to help them fill out that form. We know how it works. We know what the regulator's looking for. That goes in. There are some application fees. They're not significant at that point in time. But there is a modest fee that gets processed. That triggers an internal review process within VARA, where they say, okay, we understand where you're going with this. We'd also now like to see this, that, and the next. And there's then a process of actually giving over details such as the marketing materials that are going to be used to promote the offering, which again have to comply with another handbook, the marketing handbook. There is a requirement to prepare a white paper, as it's called, which is effectively the offering memorandum or PPM or whatever you might call it in another jurisdiction. It's effectively the document that will be given publicly to the would-be investors.
Okay.
And then that goes through an approval process, and once it's approved, we can then embed the rights, the contracts, the documentation into a virtual asset. So we mint the virtual asset at the smart contract, put it through a smart contract audit, and then make the product available on our primary marketplace. Now, the primary marketplace, which is not currently visible because we're pre-licensing still, but it will look. We're looking for a more visual experience than traditional financial services. So I almost hesitate to say it, but think OpenSea for security tokens. So it's all done right, it's all regulated, but it's a much more visual experience. It's a much more, consumer orientated. It's got pictures, it's got narratives, it's got stories about, stuff. And perhaps that's easier to do when you're talking about maybe a piece of real estate than a fund interest, but nonetheless, it's a much less kind of green screen series of numbers that you might be used to in traditional financial product investing. And then we can make it available. The investors come onto the platform, we AML KYC them, and then they can do the acquisition of the assets. It's a fully integrated custodial solution we have. So the virtual assets for both the issuer and the investors sits on our platform. We leverage third-party technologies and regulated custodians to back that off, but we front that specifically to the clients and the issuer, and then those assets are then available, and then the investors can decide to list them on our marketplace. So yeah, it does have the secondary trading marketplace.
Oh, very nice, very nice. So do the investors have to be from Dubai or the UAE, or can the investors be from anywhere in the world as long as they're on particular whitelist?
Yeah, there's obviously a whitelisting. Are you not on some sort of sanctions list or whatever else? There's that's part of our AML KYC process. We will also geo-block and block US investors, US passport holders. We all know why.
we do. That's why I complain about that, and had to go get a different passport to invest in crypto that I wanted to. So
yeah, there you go. So yeah, but with that exception, then we can onboard investors from anywhere in the world. What we obviously have to be careful of is not promoting a tokenized security interest in a market where we're not licensed. But again, we've established relationships with other, particularly virtual asset focused, brokers and ATSs and other markets. And so, just this afternoon, and it was actually a fund interest, I was chatting to someone in the UK and saying, right, it's going to be a Dubai fund, we're going to tokenize, we're going to sell that to people and promote that in Dubai, but they're particularly interested in targeting UK investors. So I reached out to our FCA regulated brokerage partner in the UK and said, right, we've got a product coming down the line. You guys open to promoting this as an offshore security interest that'll be issued out of Dubai? And they were like, yeah, absolutely. So there are, we thought deeply about how to transgress the realities of wanting to do global distribution, or at least multi-jurisdictional distribution, but keeping right within the law.
Right. And that's tough because you've got as you said, there's a patchwork of probably 20 large laws, and then there's individual laws, and even in the United States, and I believe in Australia, each state regulates securities in a different way too. So
it doesn't help. And I'd love to think we'll see a harmonization of regulation. And I know the regulators here in the UAE are pushing quite hard around, whether you call it passporting or at least mutual recognition. There have been a couple of MOUs signed and publicly reported, and I think that's progress. But I'm not holding my breath for suddenly a global regulation of security tokens.
No, and and like I said, I think that's the thing that's held it back the most, and that's the thing that's let crypto, explode the most. But I've talked to some regulators here, and I said, but by you like keeping this stuff down and not like trying to figure out how to you could actually get global investors in here more. And the other thing is that you allow these scams and these rug pulls and all the rest of this stuff to happen in the rest of the world, because you're not you're not allowing stuff that is actually real stuff and good stuff to be marketed.
Yeah, look, I've got some pretty strong views on some of this stuff.
Okay, and I don't want to get in trouble either.
No, it's okay. And I've had some pretty robust discussions, because you're right. When people talk about, we need to regulate, asset-backed tokens really tightly, but crypto less. And it's like, why? Because these ones are real, and those ones we're not quite sure what they are. Just because you represent a financial product in a tokenized form doesn't immediately mean it takes on the volatility profile of cryptocurrency, because it's real. It's got underlying fundamentals that, it's got an intrinsic value that's referable. I mean, in the case of real estate, we're collaborating with a couple of the high fidelity real estate data suppliers here in the UAE, so that we can bring in external data feeds. So one for investor education, two for validation of pricing, sort of external Oracle data feeds that justify and explain pricing both in primary and secondary market. It's not a sentiment coin that can fly up and down, because it's got a real value of real things that are happening in the real world as well. So.
Well, and you just hit on a very important point, because I had this discussion with some technology guys that were putting together a marketplace and wanted to tokenize real estate, and they're like setting up. It's like, well, this is going to be for trading, and it's like, well, why do you need to trade? Okay, in traditional real estate, you buy it, you get cash flow. In certain jurisdictions, there's benefits that that cash flow is tax protected and everything else. It's like, so, if you want to make a game and you want to go trade, then go trade crypto. But, I don't see a reason. I mean, maybe I'm just really old fashioned, but I don't see a reason why at some point later on, 20 years from now, all this stuff is going to be trading remarkably, like turning over and stuff. And I've said that from the get-go. I've said, I don't expect a tremendous amount of liquidity from this, but there's way more liquidity than you currently have now. And there's way more options. So you could take those tokens and you can, leverage them. So you could borrow against those tokens. You could, put them up as collateral for something, which, is very difficult to do with a paper share of a syndication. So, and
I agree with all of that.
And it's much better for estate planning. So,
so that you hit on a great question. We often, start with at the start of the journey. Why are you doing this? Why do you want to do this? And if there isn't a good answer, it usually falls back into that, all right, you can't raise money the normal way.
Right.
And so it's one of those great kind of insightful questions. What answer comes out of why?
Right.
And for us, if we think about our kind of why are we doing it, our sort of corporate, values around this, which is something we've spent quite a bit of time with the team, and it's part of our team onboarding, is that this isn't just about creating, the game. And we agree with you. Secondary market. I'll come back to secondary market maybe in a minute, but it's all about democratization of access to investment products and aspirational assets that are increasingly the domain only of the rich. And we're not here to solve world peace and do all of that. It's not. We're not. It's not a great big tree hugger sort of philosophy. This, but it is. I find the existing structures of access to financial products wholly unsatisfactory and unfair. And I've
Right.
had these conversations with regulators where you use the word retail in front of a regulator and they squirm. And it's like, why? Tell me why people who don't have a lot of money are too stupid to buy a high yield product. I find that a really challenging conversation. But as long as you got enough money, you can kind of waste it. And I know there are arguments for it, but I
Oh
find
no,
them.
I 100% agree with you, because I also asked the same question. Why do you allow anyone to buy a lottery ticket, but they can invest in something that's going to dramatically improve,
Absolutely.
or at least store their wealth?
I mean, I won't name names, but in Hong Kong, where I was trying to talk to regulators about tokenizing real estate in what is the most expensive real estate on the planet and the least accessible real estate for the vast majority of, citizens and residents of that place. And I lived there 11 years. It's just crazy. Millions of dollars for a tiny apartment that most people in Hong Kong could never, aspire to own. And you say to the regulator, well, can we break them up and at least get people on this property ladder, which is seemingly always running away from them? Oh, no access for retail. No, but you're right. Lottery ticket, horse racing,
Yes.
ferry over to Macau to the casino.
Yeah.
No problem with any of that. But, oh, no. If they actually want to buy a piece of real estate because they can't afford a whole one, oh, no, they need to be stopped from doing that. And I find that really unfair. And so there's quite a lot of that in our why. And when we assess the products we're bringing to market, we really look at that investor side in terms of are we really solving a problem? And part of that is selfish is the wrong word, but part of that is is it going to be an effective product? Because if we're not really solving a problem for a class of investors that want to then come and buy the product, well, it's not going to be a successful offering anyhow. But this is without doubt an opportunity to bring product to market that now is accessible to different people or a different socioeconomic group of people. And that I think is really, really interesting, particularly with an aspirational asset class like real estate, which is sadly becoming increasingly inaccessible globally.
Right. Well, and the big thing is that I was just because I was actually talking to a guy that he's a guy that does a lot of finance stuff for me and does mortgages, and he's one of the best in the business, and we're putting together a debt fund together. But he said, well, there's this guy that wants to borrow against his Bitcoin. Well, I said, first of all, he wants to borrow against crypto. Do you know how to do that? And I'm like, first of all, is it Bitcoin or is it some other thing? Because you probably can't borrow against the other thing. I said, but I explained to him, I said, you realize that like you could like do a loan on a property for me up to 75, 80% loan to value. And you know that it's not going to drop dramatically, or if it's 50% loan to value, it's almost a no-brainer. I could do, loans with life insurance companies all day long, with 50% loan to value. And I said, this guy's borrowing 50%, to value of his Bitcoin, and he could lose everything in 1 hour. If Bitcoin just, has one of those ticks where it just drops 50% or 80%. So I said that
I agree. And what's been, I'm not going to name names, but hopefully you'll see in a couple of announcements soon, where we have been collaborating with a couple of lending protocols that we're looking to bolt into, the wallet solution. There's a combination of technology integration and also, where can you do the lending for a tokenized asset? So there's obviously a whole different sets of regulations around money lending, and loaning, but We are actively working. I've seen a couple of these in testnet, and they're extraordinary. You've got your wallet, you've got your assets in there. You might have some stable, you might have some tokenized real estate. You might have some Bitcoin, and you might even have some
Right.
NFT pictures of monkeys and stuff.
Right.
And the protocol is able to attribute a value to that portfolio. It's pulling some external data sources to keep that current. And at the press of a button will give you that kind of 50% loan in stable, literally instantly.
Yeah.
And it's quite remarkable. If you compare that to traditional bank finance on a property, wow. So yeah, I think it's a little way off that, but once you start getting enough real world assets in tokenized form, and you're right, there's a whole market out there for maybe they're 2 or 3x collateralized crypto loans, but
Yeah.
once this is going to become available for real world things that are inevitably less volatile, it's going to be super exciting.
No, and I think that is where the liquidity is going to come from. So that's, when people always ask me about the liquidity, it's like, it's not the liquidity of you being able to sell it really fast, but it is the liquidity of you being able to do other things with it. So it's not just a piece of paper sitting in a drawer. And whenever that thing comes back 5 or 10 years from now, then you see the money. So.
Yeah, I mean, I think we agree, and when we're obviously modeling out the business, and we're currently fundraising, and so we're doing a lot of modeling and talking to people about that, and we've been very cautious in modeling the secondary market trading volumes, because I think we agree with you that, I mean, we don't really know, but our assumption is pretty similar to what you just outlined, that there's not expected to be high velocity trading of these things for a whole lot of reasons. But to your point earlier, there's more liquidity than there is today. It's not
Right.
easy to sell a house today. It's going to be a lot easier to sell a fraction of one on our platform, that's for sure.
Right.
But yeah, it's not going to be. There's not going to be a tight bid ask, kind of spread sitting there waiting for you to drop it in at a moment anytime soon. But what will be interesting
I'm
is,
willing to admit that I could be completely wrong in 20
yeah, and
years.
so are we. So are we.
Like,
Yeah.
trillions of dollars per second trading in real estate. I don't know, but I don't see.
I think one of the, I mean, there's obviously tax implications of change of ownership of real estate as well, and that alone I think is going to dampen down if you get hit on a transfer fee or a stamp duty every time you move a token. By definition, you're just eating up value. So that's just one of many economic reasons why I think they won't necessarily trade high velocity, but will be tradable quicker and easier than a whole house is today.
Yeah, I think it's all about access, like you were saying. It's like, there's going to be billions of more people that have access to investments that weren't available before. So
yeah.
Well, Scott, did you want to add anything else? Because I think we're about ready to wrap up. I don't want to take up too much of your time. I really appreciate it.
No, that's all good. It's been really nice to talk to you, Michael. Thanks for the opportunity. Obviously, here if you got any more follow-up. So thanks very much.
All right, well, let's talk about how, if people were interested in learning more about Tokinvest Capital, that's tokinvest.capital, what they can go and sign up on your contact page and get on a wait list, correct?
Yeah, that's right. So we've got our contact us kind of drop in your details point at the moment. Probably give us about 4 to 6 weeks, and there'll be a much more sophisticated onboarding platform launched. It's currently in design, but yeah, there is our contact us, so you can put your contact details in there, so we know you're potentially interested. So, but yeah, the website at the moment's a fairly limited functionality, including because of the phase of the licensing we're at. But yeah, you can drop your name in there and go on that kind of wait list. And we expect to have, we're targeting having interesting assets in market, certainly this calendar year. So it's not far away.
Okay, so we're third quarter right now, and we expect something really exciting. And you say the newer, more wide open Tokinvest.capital is probably going to be available within a month to within the next 3 months.
Yeah,
So,
signed off on all the figments today, so it's going into development. So yeah, should be 4 to 6 weeks.
Very nice. So people should go to tokenvest.capital to learn more about what's going on there and sign up so that you can get in on all the stuff that's going to be, listed on the marketplace very soon. Scott, we really appreciate this. We appreciate everything you've done, and looking forward to talking with you in the future. Everybody, don't forget to sign up and go get your tickets to the blockchainrealestatesummit.com. That's coming up September 24th through the 26th, 2024. The tickets are available, and I think we're going to have like one or two specials. So if you go to the website and take a look at them, but you can't beat 3 full days of, information. You're going to learn how to invest in these. You're going to learn about, what Scott and other people are doing around the world. And if you are a real estate capital raiser that has quality things, you should learn more about this, because this is going to be the way of the future. So thank you very much, Scott.
Thanks, Michael.
Thank you for listening to the Blockchain Real Estate Podcast, hosted by the Blockchain Real Estate Summit. Don't forget to sign up for the Blockchain Real Estate Summit 2024, happening this September 24th through 26th, online for our worldwide audience. Get your tickets at blockchainrealestatesummit.com/registration. If you enjoyed today's episode, please make sure to follow the Blockchain Real Estate Podcast on your favorite platform and leave us a review. Your feedback really helps increase the visibility of our show, allowing us to reach more listeners like you. If you have someone in mind you would like us to interview, you can go to blockchainrealestatesummit.com and leave a comment.
Hi, this is Adam Carswell, the voice of Liberty. This podcast is solely intended for informational and entertainment purposes only and is not intended to provide tax, legal, investment, or accounting advice. You should consult your own tax, legal, accounting, or investment advisors before engaging in any transaction or undertaking. Thank you for listening to the Blockchain Real Estate Podcast, which is a part of the Blockchain Real Estate Summit Network. Go to blockchainrealestatesummit.com for more information, free reports, and giveaways with free stuff. Thank you.